It has been acknowledged for some time the U.S. consumer is providing a major assist, keeping the U.S. economy's growth up. Our chief equity strategist and economist, John Blank, is here now to explain. John, how is this happening, especially as core consumer prices remain high?
Terry, it's happening because we have a strong labor force growth. Real wages are strong. I'll just read you what Goldman Sachs said this morning. We maintain our long-held view that a worker-friendly labor market will support consumer outperformance. We forecast a healthy 2.5% pace of real income growth. Terry, that's real means, not including the rise in prices, with positive gains for all income quintiles in 2024. Very strong statement from Goldman, Terry.
Yeah, really. So does recently released CPI and PPI data have a negative impact on this picture?
Well, plus 2%, 2.5% real income growth, Terry, is incorporating the CPI explicitly. And the PPI was actually, down in the 2% area. So those don't negatively impact that assessment.
So can we infer here then that U.S. consumers are more resilient despite the apparent obstacles that they face than they even get credit for?
They absolutely are, Terry. We've got to remember that household net worth through household, home values and stock values is at record highs. And while there is a marginal propensity to consume out of wealth that's much smaller, it is leaving the level of confidence and security with the U.S. consumer higher than not what they say, but what is in fact true.
What do you say about published headlines warning of soaring debt and deficits causing threats to the economy and markets?
Well, Terry, the deficit to GDP, not debt, but the annual deficit is about minus 6.2% currently. Before 2009, it was minus 3%. So we have tacked on an additional 3%. By my calculations, 1% goes roughly to interest payments that have gotten higher. 1% roughly goes to the tax cuts that came through during the Trump era that are 10 years and sunsetting in 2025 at the end. And a little over 1% comes from spending increases. So those are your numbers of how we got here. Certainly, we need to get this under control. And I don't think we will do it this year because of the election, but let's hope we do it next year.
So what are you looking for as far as U.S. GDP growth this year?
I think you're going to get a trend 2.1% real GDP growth rate. It's going to be long-term trend growth, but it's going to be very curious because a lot of it's driven by AI CapEx spending that is supporting the market in a very forward-looking way.
But then there's that stubborn 10-year Treasury yield curve inversion that's still lurking in the shadows. Does that remain worrisome to you?
It actually does, Terry. The problem we have here is when the yield curve inversion foretells a recession, it foretells one in a very amorphous way, meaning it can pick one up, 2, 3, 4 years later. So, the correct understanding of it is that even though we've been in one for 26 months, it can still get the yield curve inversion, can still get things right, and we can have a recession 10 months from now.
So given all of this, what are the actual odds that the Fed is going to cut rates this year?
I'd say that it's 75% they cut at least once this year. It's separates. I really think, given the European situation, which they will take a lot of interest in, if we get a June cut out of the European Central Bank, and then again from the Bank of England after their election on July the 4th, I have a very hard time thinking that if I were going to a FOMC meeting with those things on the table, I would cut rates.
So looking at the global consumer now, you've written that the strength of the global consumer, including the now traveling mainland Chinese population, remains an underrated force for global growth. What supports that?
Travel figures from the Chinese. I mean, they are, they're the last out of the gate for travel. And, I do read Chinese literature. And while a lot of it is propaganda, they generally do a good job telling the truth about what's going on that's positive. And they're telling us that their population is traveling immensely.
You also wrote recently that stock and bond markets are hoping for evidence that will solidify a brightening global economic outlook. Where might that evidence lie? Maybe in the upcoming May business activity numbers from the big economies?
Well, it already showed up in the April update from the IMF where they upgraded global growth by a tenth of a point this year. It's not much, but it's an upgrade. Yes, in the business activity, the PMI numbers for May, JP Morgan Global Manufacturing PMI, particularly, which is a dynamic and sensitive number I pay attention to, which has been over 50 for some time now, a few months at least, is telling the same story that the global economy is in better shape than people think.
Strong buy stocks you think are worth looking at right now include Google, Westinghouse Air Brake Tech, and Steel Dynamics.
Yeah, so today, Terry, we're on May the 23rd, and NVIDIA just reported. And so Alphabet, ticker GOOG, they have a few different tickers, is only up it's down minus 0.2%. So Alphabet did not trade with NVIDIA's story at all. It's in the right industry right now, internet services, and it's got an AI story. So I don't think the stock's going down. The chart looks real good for that one.
And Wabtec.
Westinghouse Air Brake Technologies, Terry. This is a provider of locomotive value-added technology-based equipment systems and services to the freight, rail, and passenger transit industries across the globe. So Westinghouse, very old name. And the stock is looking super sharp, Terry. PEG ratio 1.5, forward P of 23. Gotta like this one. I don't understand completely because I don't understand the railroad business globally, what's going on. But I think, again, from a global perspective, that's telling you trade's fine because freight's fine.
Then Steel Dynamics.
Ticker STLD. I've got it up 0.7% on NVIDIA and a value score of A. So here you have a forward PE ratio of 10.7. Again, if you're looking for stocks that have been kind of overlooked, this steel trade might be one. It's based in Fort Wayne, Indiana, and it is one of the leading steel producers and metal recyclers in the United States.
Our chief equity strategist and economist, John Blank, on the U.S. consumer and the U.S. and global economies. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.